Hello and welcome to Africa Business Weekly. I'm Akin Obakeye and I'll be guiding you through stories, latest developments shaping Africa's business landscape. And of course, my colleagues Tabitha Mutoni and Karabu Mashaba will be doing this with me. But let's get a sense of what to expect on the show today. It's a new era for ABSA as a new chairman assumes office. We'll find out what this change in guard means for ABSA's future. And then we touch on Africa's travel industry and find out how payment fraud is eroding the profits of African airlines. How can airlines tackle this challenge and enhance payment security? And then we wrap up the show with discussions from Nigeria as the country plans to tackle challenges facing investment in its power sector. All these and more will be on the show today. But let's join Karabu, who's on standby to give updates from Southern Africa.
Greetings, Akin. Well, the ABSA Group earlier this week announced that it is entering a new chapter as board chairman Silo Moloko will step down in July after steering the bank through a period of strategic repositioning. Taking the reins is Rene van Wyk, a seasoned leader with deep roots in South African banking. For a discussion on what this handover means for ABSA's future, CNBC Africa's Nomonde Kulu spoke to both the outgoing ABSA chair Silo Moloko as well as the incoming chair Rene van Wyk.
What stands out really there's been a number of highlights. One, obviously, is some of the changes that one has had to make on the board in terms of refreshing the board for, for the future, as we deal with some of the succession issues. Certainly, one of the key highlights for me is when realizing as a board that, we were probably not moving in the right direction from a strategic point of view, that we took all the effort that was required to work together with management to help reposition the organization for a better and improved performance trajectory. And obviously through that, we've had to also bring in new leadership. We appointed, what we feel is a very solid CEO into the organization, and also, redefined our strategic path for the retail business, which is an important part of the organization. Obviously, other parts of the business, in our view, were, on track. But we just needed to make sure that we focus on the retail business to make sure that we prepare the organization for a much better future. So I think a lot of work has been done to date to reposition ABSA for better growth.
Staying with you, Selo, you mentioned in the announcement that was put out today that the decision to step down was rooted in a need to refocus on some personal priorities that you have. How difficult was that call for you to make, especially given some of the progress and strategic repositioning that the group is currently working on?
Yeah, look, it was a very difficult decision to make. But often some of these, decisions come at very inconvenient times, like this one. So it was a call that was based on the amount or the investment in time that I had to make in the past year as we worked hard towards the repositioning of the organization that made me reflect on the demands on myself, on the demands on my personal time, and also not being able to give a business that I gave birth to in 2005 sufficient attention to be able to address some of the things that need addressing. So it was a question whether do I stay, a little longer, but then at the same time things can go wrong that are actually more important for me personally. And as a result, it was a binary decision whether, do I stay on at ABSA and let things go on the way they have been, or do I, pass the baton on to somebody else and take the responsibility of sorting out my legacy for my kids as I turn 16 July, to make sure that I sort things out. And the decision was very clear in my mind as to the direction I should take, hard as it is.
Right. Mr. Van Wyk, coming to you, firstly, congratulations on your appointment. As you prepare to take the reins, what's top of mind for you in this transition phase?
Well, I think very importantly, there's business as usual. All the groundwork has been done. And, so I don't think there's anything that I must do now that requires urgent attention. Stella has led the organization, the board, in the strategic direction. And as he mentioned earlier, we are pleased about what has happened. We've now got a permanent CEO joining us soon. So, yes, I think now it is just to consolidate, get steadiness in our management and support, and be the best bank for our clients.
In more news down south this week, South Africa's Reserve Bank has urged inter-dealer brokers to prioritize quoting linear derivatives using the South African Rand Overnight Index Average, or ZARONIA, over the well-known Johannesburg Interbank Average Rate, or JIBAR. While JIBAR-based screens remain available, the SARB said this shift is critical to strengthen South Africa's financial market infrastructure. For more, CNBC Africa's Fifi Peters spoke to Bafundi Maronoti, who was a senior manager for market operations and analysis at the SARB Financial Markets Department.
The work on replacing JIBAR has been going on for quite some time. In fact, I think we published our first set of proposals in 2018 in a consultation paper where we recommended South Africa moves away from using JIBAR and considers an alternative reference rate. And this is part of a global shift where we're moving towards more robust interest rates and following in particular cases of actual and attempted manipulation of such rates. And this was more the case in Europe and in the US with LIBOR. So in South Africa, as our LIBOR equivalent is JIBAR, which is the Johannesburg Interbank Average Rate. It is determined in more or less the same way as IBORs were. And there's basically a couple of issues that we've identified with JIBAR that have led us to a decision to transition to ZARONIA. First is that the rate itself is prone to manipulation because of how it is determined. The second one is that there's now a set of principles that have been developed by the Financial Stability Board for how benchmark rates should be determined. And the key requirement as far as that's concerned is that rates need to be based on actual traded transactions, or what they call rates needing to be anchored on observable transactions. And that's exactly what we're trying to do with ZARONIA. So ZARONIA is different in many respects to JIBAR. It is an overnight rate that is calculated based on interest paid on wholesale deposits to commercial banks. And that is, as I said, quite different from how we determine JIBAR currently, as JIBAR is a 3-month rate that is quote-based and not based on actual traded information. So that is the essence of this. It is about strengthening the interest rates that are used in our financial markets for pricing derivative contracts. Some of the numbers that we started with, they remain more or less the same, where JIBAR was used, for example, in the derivatives market to the tune of about 40 trillion rands worth of contracts that were referencing JIBAR. And it was important, therefore, for us to strengthen that rate, given that it was so wide, it was so deeply entrenched in our financial system.
Right. And in the lead up to today's announcement, Bafundi, in which you're calling on brokers to start prioritizing ZARONIA in the use of their derivatives, what has market perception and sentiment been?
It started off a bit challenging, I have to say, but I think what helped us with the build-up and the transition that we're getting into is that advanced economies began this work well ahead of us. So, for example, if you look at the US, they no longer use US LIBOR. They use an alternative, which is called SOFR. It is exactly what we're doing. If you go to the UK, they also did the same. They no longer use sterling LIBOR. They use what they called SONIA. So I think that helped us a lot to get to where we are today and trying to convince our market that this is a good thing to do. I do think that they too, having observed the issues that were observed in international markets with LIBOR that they understood why this was important. But that did not stop, for example, us having challenges. And I think it is understandable because, as I mentioned earlier, there are big differences between JIBAR and Zaronia. The first being that JIBAR is a 3-month rate and Zaronia is an overnight rate.
And those were the stories driving the southern tip of the continent for this week. You can, of course, revisit these stories on our website on cnbcafrica.com. But for now, it's back to you, Akin.
Thanks, Karabo. Tabitha, can you bring us up to speed with stories from your region?
Hello, Akin. We are into the second quarter of 2025 and companies are beginning to release their first quarter financial results. One of them is MTN Rwanda, which has posted a solid set of profits. CNBC Africa's Abiagina spoke to Dancer Nayodele Stoba, the company's chief financial officer, for more on their performance.
Indeed, the numbers, well, you said it, the numbers we are pleased with. And particularly so given the background of where we came from in 2024. I'm sure you recall in H1 of 2024, the media was awash with headlines of, MTN made 11 billion loss, etc. So it's been a journey from there to recover from that situation. And of course, we did, a lot to exit from 2024 with a profit in Q4. And we've built on that momentum now getting into Q1. So first, we are very pleased for a top-line growth that we delivered, double-digit growth of 12.3% on service revenue. And that's mainly because of the commercial execution that we've been focused on. For me, I've always said for a telco, we focus on my personal drive is to look at the DNA of the business, which is how are we doing on distribution, how is our network doing, and from an affordability point of view. And I think in Q1, we checked all those boxes. We reinforced our distribution network because you also remember somewhere around August or September last year, we had the new regulation on SIM registration, which saw a significant drop in our gross additions. Last 2024, Q1, before the regulation, we did about 600,000 plus of gross addition. Whereas because of the regulation, we came down to just over 400,000. So, but that's a ramp up again because of the intensity we've put on the channel. And then our pricing, we've launched a very aggressive and very attractive value proposition, Guamon, which is exciting our customers. That's also ramping up. So that commercial space has been very well executed. I will continue to do that. So that gave us the top line growth of 12.3%, like I said, double digit, very excited. And in the contribution margin, again, focused approach, we contained the last year Q4. We came under significant pressure because of cost on the one area network in East Africa, which we've contained. And our gross margin looking very healthy. Again, we started growing our gross margin over 80%. And from a cost point of view, even though the reported numbers show a 28% year-on-year increase in cost, but that because of the, like I said in our call, because of the treatment of accounting leases. Now, when we normalize that, our costs were basically, again, 12% year-on-year, same as revenue growth, which for me, our underlying EBITDA is almost over 44%, which is quite impressive and very encouraging. And lastly, one of the things we did in Q4 was to, I usually say, are we sweating our assets properly? So we did a review with our group and a few other benchmarking exercise to see, are we really depreciating our assets over the correct useful life? So we did some adjustment there. Depreciation came down a bit, and therefore we are able to report a profit of 1.6 billion, which was quite a relief, and I'm very pleased with that execution for Q1.
Now to a key development affecting the travel industry. African airlines are losing millions each year to payment fraud. A new report by Visa and the African Airlines Association highlights how carriers across the continent can tackle this challenge, boost revenues, and enhance payment security. I spoke to Michael Bana, Visa's head for Southern and East Africa, on the findings.
We had a cybersecurity summit held here in Kinshasa in a very close partnership with the National Bank of Kenya. We've done it for the third time. We had a National Bank Governor, Mr. Tuge, addressing the audience. We had about 100 people of experts in financial sector and cybersecurity coming and joining us. It was an excellent event, and we had a very good platform to discuss the current trends in cybersecurity and fraud. And actually, the things which are coming across based on the research and based on the discussions are pretty simple. People remain to be a weakest link, and we need to invest pretty significantly in making sure that we have educating the end consumers on the possible fraud and scams, but also need to deploy technology. And that's where Visa is supporting the airlines, supporting the broader e-com players with the best state-of-the-art AI-based technology. Over the years, we invested about $12 billion in cybersecurity, and we try to support all the industry players, including, of course, the airlines, in order to take the fraud levels down and actually detect and protect. So we work on that with the regulators. We work on that with a wide range of fintechs. We work on that with a number of technology providers. And that would continue to be the mission which we take. And we think that this close work and collaboration should help to bring the fraud levels down. And obviously, everyone needs to stay very vigilant in terms of the cybersecurity.
Yes, Michael, let us focus on the report. And I'm looking at it, and I am saying that Visa's white paper suggests stronger payment infrastructure, which could boost airline revenues. So what specific innovations or systems are proving most effective across the continent?
Well, we've, for a number of years, we're working very closely with a number of airlines and also the other technology companies on fraud solutions. That's probably one of the very important elements which we work on. I can give you a real example. We deployed very recent innovation in fraud detection, AI-based, with one of the airline in Africa, and the fraud rate went down from 3% to 0.1%, just across the 90 days period. So that's some of the things which help to take the fraud levels down. And talking broadly about the airline segment, Visa is very focused on bringing a number of solutions to airlines. Visa is a global leader on co-brands. The co-branded cards, which are issued with the logo of the bank and the airline, which gives the opportunity consumers to earn miles for every spend they do. This is very popular. This is very popular in a lot of markets outside of Africa, and this is now coming to Africa. Visa has signed very recently a big contract with Royal Air Maroc, followed by a contract with Egypt Air, and we're working with a number of airlines in sub-Saharan Africa to bring together the best product for the consumers. Also, we work in a number of instances with the ministries of tourism and the airlines in order to increase the incoming tourism and make sure that the incoming tourists have an opportunity to pay for their expenditures when they're in the country using the most modern ways of payment, which includes tokenized transactions, which includes e-com bookings of the travel in advance and things like that. So that helps actually in a multiple fronts. That helps countries to develop their tourism sector, get more revenue, and make sure that the foreign currency is actually flowing to the country and improving the current account. Also, it helps to increase confidence among the travelers that when they come somewhere, they have a chance to use their traditional and very familiar payment tools.
Those are some of the latest business updates from the region this week. For more, let's head back to you again.
Many thanks there, Tabitha. Now, in Nigeria, CEOs are seizing the potential of generative AI and climate change to reinvent their operations and business models. Wondering how? Now, a PwC 2025 Global CEO survey notes that 61% of Nigerian CEOs remain optimistic about the future, despite the backdrop of geopolitical and trade tensions. They anticipate a rise in economic growth in the next 12 months. Now, Sam Abu, Regional Senior Partner at PwC West Market Area, unpacks the report.
We conduct these surveys every year, and this survey we had over 4,700 CEOs across the world in over 100 countries participate, including Nigeria. And the theme of the survey is from resilience to reinvention. And I think that indicates and symbolizes how CEOs are viewing the business environment across the globe, and Nigerian CEOs are no different. And like you've indicated, about 61% of Nigerian CEOs are optimistic about the future, in spite of the challenges that they currently face, macroeconomic challenges such as volatility, inflation, and the likes. But CEOs, because of the dual opportunities of technology, AI, and reinvention, are optimistic about where their businesses would be and what kind of growth we would experience in our environment in the next few years. So whilst there are concerns about the geopolitical pressures across the world and the impact it has on businesses, CEOs believe that there will still be growth and that they will still be able to compete favorably in the future.
And talking about competition in the future as well, now we also need to narrow down into the sort of adoption and the potential for generative AI, and also looking at climate change considerations, how this is also introducing and reinventing the sort of business models we are seeing. But for me, I'm quite keenly concerned around the sort of introduction of fresh nuances here and areas of concern. How are these CEOs also weighing their exposure? Because at the end of the day, we still have issues around the adoption of generative AI, cyber risks are still there, and then how do these businesses position appropriately when we are looking at climate change and integrating that into their overall business models? What are the nuances here that have caught your attention so far?
And one of the key concerns for CEOs, particularly in Nigeria, is the workforce and the inability to get the kind of talent that you need in your business. And that is one of the areas where generative AI, digitization, and technology plays a very crucial role in business success. And CEOs are very mindful of that. And David, I'll just remind listeners that in every revolution, there are winners and losers. Whether it's the agricultural revolution, the industrial revolution, the technology revolution. Right now, we're right at the cusp of another revolution driven by artificial intelligence. And I think CEOs are very keenly aware that there will be losers and winners, right? And many CEOs in Nigeria are reinventing their business and are preparing for the next wave of what that means for their businesses. And like you said, it does have very interesting nuances. For instance, how quickly can you adopt technology, Gen AI? What governance structures do you have in your business to support that adoption?
Nigeria has established the National Integrated Electricity Policy, a blueprint aimed at reshaping the country's power sector. Now, the implementation of the policy has already commenced, with the policy addressing key issues impacting the growth of the sector. Judge Etomi founder Judge Etomi and partners discussed the impact this policy will have in the country's power sector. Take a listen.
Good that we are having a policy straight out of the new law, because at times the waiting period between when a law is enacted and then a policy directive is given can leave gaps that would create disturb market confidence in the sector. So this is good. But what does it really recognize in this particular case? It's looking at the Act, don't forget, has introduced new players into the entire value chain. Right. The states are coming in full blend. I believe Lagos State just recently announced that, in fact, they recently confirmed members of the State Electricity Regulatory Commission, with marching orders essentially to make Lagos State, the regulation robust enough to attract the kind of investments that could impact on tariffs, because tariff is the elephant in the room. And then it recognizes newer sources of electricity, renewables principally. So you need to deal with all those regulations, mini grid regulations, and all those things that will enable you providing electricity without necessarily going through the grid. Like we've always discussed, evacuating electricity has been a major challenge of the sector since privatization. The installed generating capacity is nearly 13,000 megawatts, but we're still struggling with the ability of the grid to will more than 5,000. At times it gets to 6,000, it gets strained, it goes right back and down. And if you recall, one of the of the privatization was that it would provide the distribution companies at least 5,000 megawatts of electricity. Right. This is 2013. When 2025, we're still talking about the same number. Just gives you an idea of where we are. So if something is not done to make the grid a bit more robust, then whatever plans you have will undermine these policies. Yes, you want to do mini grids, off-grid solutions and all that. The lead time is a few years.
Right, I was going to ask about that. I mean, on paper, obviously, it's good. Provides comprehensive, clear guidelines for, power generation, distribution, and all of that. But obviously, there are still issues that are happening right now. And one of those issues, I heard the power minister say, was around the debt for being owed the generation companies, 4 trillion now. And I know there's going to be a meeting between the government and the GenCos, and there's been assurances made by the federal government that this debt will be cleared, a significant portion, while others will be maybe through promissory notes in the next 6 months. So those are just one of those main issues, within the value chain. Can we address this issue head on?
It has to be addressed head on, and it should have been addressed head on. If you remember from the early days of privatization, there was always the issue of what they call subsidy, the difference between what was considered the cost-reflective tariffs and what the government said electricity should be sold for. That debt usually occurs at the generation end because the distributors collect money, but the electricity is generated anyway.
Right.
They, on their own, also rely on their primary feeds. In the case of the thermal plants, it's gas. In the case of hydro, it's water. And if the generation...
And that's all we can take on this episode. You can catch all these stories and more on our website on CNBCAfrica.com. Thank you for joining us today. Until next time, stay informed and stay ahead with Africa Business Weekly. I'm Akin Obakeye, and we'll see you again, same time next week. Bye for now.